Palantir is challenging the gravitational limits of financial logic in a way we've never seen before. After already surpassing $6 billion in annual revenue, it somehow delivered a staggering 70% year-over-year growth surge. This isn't just an earnings report. It's a direct rebuttal to the narrative of a Silicon Valley AI bubble. While most AI companies are still fine-tuning models in the lab, Palantir has leveraged its unique ontology architecture to transform AI into a true operational engine, one that powers national systems and corporate empires alike. Welcome back to Deep Dive Stock Earnings. Palantir is no longer just a government contractor with explosive U.S. commercial growth. It's emerging as the operating system of AI. Today, we break down its stunning 127 Rule of 40 score and how it plans to win in a world where LLMs are becoming commodities. In Q4, revenue reached $1.41 billion, while growth held at an extraordinary 70%. Normally, as revenue scales, growth inevitably enters a phase of marginal deceleration, but Palantir has demonstrated a counterintuitive acceleration effect that signals its products have moved beyond early adopters and entered full-scale industry deployment. Sustaining this kind of growth momentum at scale is virtually unmatched in today's SaaS landscape. It means Palantir's sales efficiency is accelerating not linearly, with customer acquisition costs diluted by powerful product stickiness. This escape velocity signals that demand for decision-grade AI has hit a tipping point. Palantir no longer needs to sell the vision. Real-world impact has transformed it from optional software into mission-critical infrastructure. The company raised its full-year 2026 revenue guidance to between $7.18 and $7.20 billion, roughly $1 billion, above prior consensus expectations. In investment banking models, that's what you call a structural break. This kind of guidance premium sends a clear signal. Palantir's backlog visibility is extremely high. Future growth isn't theoretical, it's contracted revenue in the process of being recognized. When a company confidently guides $1 billion above expectations, it's effectively declaring pricing power. That level of conviction reflects how rapidly the AIP platform is penetrating private enterprises, much faster than anyone anticipated. The old narrative that Palantir was overly dependent on government contracts has been completely dismantled. U.S. commercial revenue surged 137% year-over-year. Even more telling, remaining deal value, a forward-looking indicator, jumped 145% to $4.38 billion. This marks a structural shift. Top-tier U.S. enterprises are lining up to embed Palantir's technology directly into their core operational workflows. Private enterprises move faster than governments, but their ROI standards are ruthless. The doubling of commercial revenue proves Palantir can generate visible profits for clients in a short time. It has evolved from a crisis response tool into a real-time operating brain for enterprises, unlocking a growth market far larger than government budgets. Palantir's management articulated a profound industry insight. Large language models are rapidly becoming commoditized. That means standalone model value will inevitably decline. The true moat doesn't lie in the model, it lies in the software architecture that connects those models to vast, real-world enterprise data environments. That architecture is ontology. Without it, AI remains an expensive lab experiment, incapable of executing legally binding or operationally complex tasks in the real world. The message is simple: don't worship the model, trust the logic layer. Palantir isn't building the brain, it's building the nervous system. An AI brain without connections to business logic can't take action. Over 2 decades operating in highly complex data environments, Palantir has constructed what is arguably the most mature ontology framework in the world. Under the software industry's gold standard metric, the Rule of 40, Palantir scored an astonishing 127%. Typically, 40% is considered solid, 50% is world-class, but 127% is statistically an outlier. This means Palantir is sustaining 70% growth while delivering a 43% GAAP operating margin. That rare combination, explosive growth paired with extreme profitability, demonstrates extraordinary operating leverage within its business model. A score of 127 is practically alien-level performance. It suggests the product is approaching a form of self-propelling sales, where growth doesn't require proportional increases in sales headcount. This kind of profitability allows Palantir to expand aggressively without diluting shareholders or relying on external capital. While expanding commercially, Palantir's traditional stronghold government still grew 66%. Take the U.S. Navy's ship OS as an example. Submarine maintenance scheduling that once required 160 hours of manual planning has been reduced to under 1 hour using Palantir system. That 100-fold acceleration, in national defense terms, translates directly into generational survival advantages. That's the core reason Palantir is so hard to replace. It doesn't just deliver analytics, it delivers decision speed. Its reliability, proven in extreme, high-stakes environments, serves as built-in credibility when software can manage nuclear submarine maintenance and counter-terror intelligence. Banks and manufacturers trust it with complex operation. Through deep collaboration with NVIDIA, Palantir is addressing the ultimate bottleneck of AI infrastructure expansion, power, and energy management. This signals ambitions beyond software. Palantir aims to become the command layer for energy flow optimization across AI data centers, extending its reach into physical infrastructure coordination. This is strategic foresight. The endgame of AI competition is energy competition. Palantir understands that without electricity, even the best AI software is irrelevant. Through initiatives like chain reaction, it's applying to decades of logistics and supply chain optimization expertise to the power grid itself. Financially, Palantir has constructed what can only be described as a fortress balance sheet. The company holds $7.02 billion in cash and carries zero debt. In today's high-rate environment, that kind of financial discipline provides enormous strategic flexibility, whether executing large-scale share repurchases or pursuing critical technology acquisitions. Palantir operates from a position of independence. In short, Palantir has pulled off an epic transformation with a 127 Rule of 40 score and $7.02 billion in cash. It's proving it's not just an AI software leader, but a financial fortress with a powerful moat. It no longer profits by predicting the future, it profits by managing complexity. I'm Deep Dive Stock Earnings. See you next time.